Hi everyone, welcome to the video lecture. In today's class, we are going to discuss about the financial reporting. As we all know that financial reporting is an important activity of any business entity. So in today's class, we are going to learn what is this financial reporting, its uses and the types of financial reporting, and also how the different components or the different items in the financial statements connected to the manufacturing sector, banking, IT, and ITES companies are going to be reflected. Let us begin our discussion to know more about financial reporting. So let us start with the meaning of financial reporting. What do you mean by reporting? So financial reporting is defined as the communication of the published financial statement and also related information from a business enterprise to the third parties, that is the external users. So external users includes the shareholders, creditors, customers, government authorities, and also the public in large. So it is a reporting of the accounting information of an entity to the users or the group of users. But very important to note that financial reporting is not just restricted to the information which is communicated through the financial statements. So disclosing a financial statement is a mandatory requirement, but when the financial reporting takes place, it gives more details than what the financial statement gives. So financial reporting has a broader scope than the financial statements, which are only one of the many means of conveying the information about the enterprise's financial performance. Then the question comes, who are the end users of this financial reporting? So who are going to get the benefit of reporting regarding the financial data? So first one is the investor, who are the present investors or maybe the prospective investors. So they may be interested to know how their investments have been or might be used by the managers. And also they need a data that help them to determine the present and the possible future value of their investments. Now, coming to the second categories of the people who are interested is the employees. So employees are also interested in knowing about the financial information which comes through the financial reporting, which may be useful for determining the extent to which their employer has prospered and possibilities that they might lose their job or get the promotion. And also the bonus and other rewards are often usually based on the financial performance. Coming to the third category, they are the creditors. As we know that the creditors are the lenders of money to the business. So they are concerned with possibilities that the enterprises will not be able to repay its debts or honor its obligations. So financial performance can indicate or give a security to the creditors how they are having a financial capacity to pay for the interest and also repay the loan. And suppliers and other trade creditors also interested to know the financial information which comes through the financial reporting. We have another set of people who are also interested in financial reporting. They are the customers. Customer in the sense they may be the small customers who buys in a small quantity or maybe the corporate customers. So they are interested in information about the continuation of an enterprises, especially they have a long-term involvement with or depending on the enterprises for their raw material. Then government and their agencies also are interested because they need information in order to regulate the activities of the corporates and also decide the taxation structure for the business enterprises, which is going to be the base for the national income and also for some other future planning process. And the third category who are maybe interested is the public. So enterprises may be a substantial contribution to the local economy in many ways, including the number of people they get employment opportunities. So that is the public who are interested in the financial data. As we discussed earlier, financial reporting is much wider than just disclosing our financial statements. So, financial reporting refers to the process of producing a statement that discloses an organization financial statements to the management, investors, and the government. So, the main purpose is to provide a necessary financial information that helps in the decision making process. So, financial reporting is very wide, which includes annual reports that annually the organization brings it and publishes it. The second is the financial statements, which includes our balance sheet, which disclose the financial position, then income statement, which is going to depict the profitability of our organization, and also the cash flow statement. And the third component is going to be the interim reports. So there may be the interim reports which are generated, which gives the result of the interim operations, maybe half yearly. Then comes the management discussion and also the analysis, where the CEOs or the CFOs or the directors, board of directors might have done a detailed discussion about the operational performance and also financial performance and also the major challenges that the organization has gone through. So that detailed discussion and analysis can also be the public document which comes through the financial reporting. Then finally, notes to the financial statements. So these reports are essential for various stakeholders such as investors, creditors, analysts, and the regulatory agencies. So they are going to assess the financial health and the performance of a company. So financial reporting includes disclosing their financial performance through the annual reports, through financial statements, interim reports, management discussion and analysis, and also notes to the financial statements. Let us understand each components of financial reporting. So let us begin with the annual reports. So what is annual report? As we all know that annual report is a comprehensive document which is produced by a company each year that provides a detailed accounts of its activities and also the financial performance. So these reports are meant for the shareholders, investors, and regulatory bodies, summarizing the company's operations and financial position over the past years. So the major key components in annual reports are going to be the chairman's letter, where a message may be given from the CEO or the chairman, highlighting the company's achievement and also the major challenges that the organization has gone through during that particular period of time. Then annual report also includes a business overview discussion where the description of the company's mission, vision, and significant business strategies may be discussed. Annual report also includes a very important item, that is a financial statement, where the detailed report on the company's financial health, where each item in the balance sheet and income statement and cash flow statements might have discussed in detail. Then the fourth item in the annual report is going to be the discussion on the corporate governance, which gives information on how the company is managed, which includes the detailed information about the board of directors. Then the last item in the annual report is going to be the management discussion and analysis, which gives a narrative from the management analyzing the financial performance, risk, and the prospect of the company. So the purpose of annual report is going to help the shareholders evaluate the company's financial health, future prospect, and also overall performance. A second component in financial reporting is going to be the financial statements. As we all know that financial statements are the end products of the accounting process and are prepared at the end of the accounting period to reveal the financial position of the enterprise at a particular date and the result of its business operation for an accounting period. So as per section 240 of the Companies Act 2013, the financial statement includes four important items, that is a balance sheet which depicts the financial position of the organization, clearly stating what are the assets and liabilities of the organization on a given point of time, and also an income statement, or it's a statement of profit and loss which gives the profitability position of the organization. Along with the balance sheet and the income statement, there may be some other details given which we refer it as notes to the accounts. So details regarding the accounting policies or some key items which are connected to the balance sheet and income statements are going to be given as the notes to the account. Then third item in the financial statement disclosure includes the cash flow statement, which gives how our organization is going to generate the cash and how it would have spent it. So it gives a detailed discussion on how the cash generated through the operating activity, financial activity, and also through the investment activities. The third very important item in the financial reporting includes the interim reports. So interim reports are financial reports which are prepared for a period which is shorter than a fiscal year, which is on quarterly basis or half yearly basis. The interim reports includes the financial information or the revenue information, which may be in the form of income statement, and again the balance sheet and cash flow statements are going to be the content of the interim reports. The interim reports also includes the updates on a business performance, significant changes or the events which have affected the company during the particular period of time. So the purpose of interim reports is to give a shareholder and an investor more frequent update on the company's performance than the annual report. So annual report takes complete 1 year to give the company's information, that is a financial efficiency as well as the operational efficiencies are going to be disclosed for 1 year. But someone wants the data in between, that is a half yearly or quarterly. So with the intention to provide more frequent information about the company's operation, interim reports are going to be very crucial. Top level management is answerable for the consequences of the decisions what they have taken. So, in the financial reporting, through the management discussion and analysis, the management is going to give a detailed analysis of the financial result. So, the fourth important component of financial reporting is going to be the management discussion and the analysis. So, this section is a part of the company's annual report or other financial filings with the management provides a detailed analysis of the financial result, the reason behind those results and the company's future outlook. So the management discussion includes the performance overview where the discussion of company's financial performance over the reporting period might have discussed, and it also includes the risk factor, that is a description on any potential risk that the company faces that could impact their future performance. So what is the present risk scenario that the business is going through? Then forward-looking statement can also be the component in this aspect, where the management's view on the future prospect including the plans for the future growth or dealing with a risk. So the purpose of management discussion and analysis is to provide the investor and the stakeholder an insight into the company's business strategy, operational results, risk, and the potential future performance. So it is going to help to bridge the gap between the numbers in the financial statements and the real world business context. Last item in the financial reporting is going to be the notes to the accounts. So notes to the accounts are additional information which is going to explain a company's accounts such as a balance sheet, income statement and the cash flow statement. So these notes are going to provide more details about the numbers, what the statements are going to depict, and also the transactions which are reported in the financial statements. So these notes are going to reflect the accounting principles and also the facts that can have a significant impact on the judgment of the readers of this accounting information. They can have also the additional disclosure which is specified in the accounting standards shall be made in the notes to the accounts or by way of additional statements which are required to be disclosed on the face of the financial statements. With this, we have come to the end of our discussion on financial reporting. So let us recap. In today's discussion, in this class, we understood what is financial reporting, how the financial reporting is different from the financial disclosures or the financial statements, its uses and its types, and also the major or the key components in the financial reporting. So in upcoming class, in the next class, we are going to learn more about the financial reporting in connection to the financial disclosure of the manufacturing sector, banking sector, IT and ITES companies. Thank you. Thank you so much for patience listening.